This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 224 is brought to us by Bybit. There are traders all over the world adding to their Bitcoin stash just simply by trading. It's the best way to do it. And you not only get one of the largest, most well-capitalized brokers out there, you get the broker that survived the largest hack in history like it was nothing. Oh, and by the way, you get tons of rewards simply by clicking my affiliate link when you sign up, deposit, and start trading. That link can be found down below in the Bybit blog in the show notes. Click the blog, read the blog, see if it's for you, and at the very bottom of that blog, you're going to find that magic link. Click it, get signed up, and get on your way. This is not available in the United States, but I do have a link for you as well. Check that out. We'll be talking more about that brokerage soon, but for now, just remember, with Bybit membership has its rewards. It is the 10-Minute Contrarian Podcast, and yes, I did go shopping this week. It was the beginning of the month, and I was getting signals on my monthly chart, and I haven't bought much in a while, but I did this week. Now, I didn't really buy, remember the parlance we use here, I just relocated my money from cash over to assets in an attempt to balance everything out. I was a bit cash heavy there. And it just so happened I got some really great signals. So in episode 224, we're going to talk about what I bought and why. And hopefully this can help you in your asset buying journey. I feel like the majority of my hardcore listeners should be pretty much on board with all of this, but it's always good to reinforce things like this and take a look at which sectors are viable right now. We are in a time where it's very happy and joyous days in the kingdom. Bitcoin, Ethereum, gold, silver, uranium, copper, all hitting highs. But because they have hit highs, many of us, if we're doing things right, have taken some profits. And now we need a place to redeploy those profits. So what is cheap right now? What is buyable right now? That is what we're going over today. And I just want everybody to remember when we bought gold miners, silver miners, uranium miners, Bitcoin, Ethereum, we bought them when nobody else wanted to buy them. I had very few people on board with me. Just remember that as we go over this episode. There will always be a little voice in your head somewhere saying, no, don't buy that because of X, Y, and Z. But I also want to lay out today that even if you are wrong, technically, with some of these buys, it's not a big deal. You can just be wrong and move on. So let's start with the first one. I bought a steel company stock. We have talked briefly before that steel is going to be a big component of the reindustrialization of the United States and also the big push for AI. Problem is a lot of steel companies were running and had already run past any buy point that I was ever going to get. But there were a few which hadn't, and one I liked, and it also pays a really nice dividend. So I entered, and now I'm getting paid to wait. And if for some reason it were to give me a reverse signal on the monthly, don't forget we do use the monthly chart here for entrances on non-crypto assets usually. It is the best way, in my opinion. But here's the thing with all of these. If I get an opposite signal and for some reason I'm wrong on this entry, it is absolutely not a big deal. I'll just simply exit, take a small loss, and then wait to re-enter. I want exposure in this particular sector. I don't have any currently, or I didn't until I bought it. And because I am a long-term buy and holder, when I buy stocks, I keep them, which means after accumulating these for 5-6 years, you end up with a lot of stocks. So because of my abundance mindset, which is the opposite of a scarcity mindset, which is what most people have, I don't worry about taking losses anywhere. If I do, I do. I cut and run. Just like in the episode on scarcity mindset. If you have 25 women in your life and one of them starts acting crazy and giving you a hard time, who cares? Just get rid of her. Replace her with somebody else. Now, if you only have maybe 2 stocks in your portfolio, okay, yeah, maybe this is a bigger deal than it would normally be. Now, you should still take the same approach. Just psychologically, it's going to be more difficult because of your natural scarcity mindset. You're going to sit there and think all your money's getting washed away if you take a loss here. Again, it is not, but I really love the upside here. I love the dividend I'm getting. I like the exposure I'm getting to a sector where I didn't have any before. And I'm very satisfied with the buy. Moving on, I got more copper exposure in a stock that was hitting all-time highs. Now, this is not something I normally do, but this is a tactic that a lot of people on Wall Street do. They wait for 52-week highs before they get into anything. It's like classic technical analysis where you wait for something to break out on long-term resistance. Now, this usually goes against what I like to do. You guys hear me say it all the time. I love buying things when they're cheap. Well, there's not a whole lot of cheap copper out there right now unless you're going to go the juniors route, and I'm already loaded up on juniors, and most of those juniors are not performing very well. It's just not time yet. So I need more major copper exposure. If you go to the main copper mining stock ETF, ticker symbol COPX, you will see exactly what I'm talking about. Most of your larger companies look like that ETF does right now. But I still got a good monthly signal on one of them that I've been radaring for a while, and I went ahead and pulled, and I'm telling you now, if some copper exposure is good, more is better. I tweeted it out this week. Do not let this trade, do not let this sector run away from you. It is a generational trade, which I have been talking about for the better part of 5 years now. But I got more exposure there, and I am very happy with it. Which one should we do next? Let's go to lithium, because I've been talking about this for a while too. And I said as soon as I get some follow through to the upside, because a lot of these things were scraping the bottom. And if I can just get any momentum going up, that's going to trigger my charts, and I'm going to get in. This past month, if you didn't know, Trump added lithium to the critical minerals list in the United States because, it really is. And that was the signal I needed. Now, if you've been following these lithium stocks, you may feel what I felt this month too. It's like, all right, we wanted a breakout, but we didn't want it that big. For God's sakes, could you just give me a smaller candle and a cheaper price to get in? But what you have to do in this situation is zoom out. You are getting these stocks extremely cheap in the grand scale of things. You're just zoomed in too close. Now, oddly enough, I have been looking at a handful of lithium stocks. And even though I just got done saying what I just said, and you guys know me too, I always try to walk the walk. I actually had another lithium stock I was looking at that didn't run as much, but still gave me a signal. And as a tiebreaker, and only as a tiebreaker, I chose that stock instead. It was pretty much a dead toss-up, and I had to have some kind of tiebreaker, so there it was. Now, before I get to the last one I want to talk about, I did tweet some of these out, kind of like generally say, hey, look, you got to really look at this sector here. And then immediately there's people who think I'm a signal service and ask me, oh, what was the name of the stock you bought? What should I buy? I'm not a signal service. If I was, you'd be paying for it. And when it comes to crypto, I actually kind of am a signal service because I said I'm going to give full transparency on that. So just have to remind you again, but I will say this, this podcast is, the majority of people listen to this podcast on audio. It does go to YouTube. If you want to go over to YouTube and go down to the comments section of this video, and in any of these sectors want to talk about some of the stocks maybe that you bought recently and why you like them, if you want to help the community out in that way, feel free. I think it promotes laziness and dependency, which is why I don't do it, but maybe you see things differently. Or maybe you're just excited and you want to talk about some of the stuff you bought. I'm okay with that. A lot of people do go down to the comments section of my videos and my podcasts for extra help and extra advice, which is the main reason why this entire time I've always kept my comments section free of spam, which is a pain in the ass sometimes, especially when I talk about crypto or even say the word crypto like I just did. I'm probably going to get hit now. But again, feel free to partake in the comments section as a commentor and as a reader. All right, so far I bought a steel company, a copper company, a lithium company. And then if you were paying attention on Twitter this week, I kind of tweeted this one out late at night. I'm not sure if everybody saw it. But you want to talk about contrarian right now. I bought an oil company, and I make absolutely no apologies for this. The oil price is depressed and has been depressed for a while. But you have to remember, too, not all oil companies are the same. There's a lot of different categories they could fall into, and the price of oil affects them all differently. There's upstream, midstream, downstream, oil fields companies, services companies. It's a really robust sector, which means there are opportunities in this sector everywhere, regardless of what the price is doing. Now, with oil, the reason I saved this for last is we do have some geopolitics at play here. Now, again, people get all bent out of shape when I talk about geopolitics if they have differing views, but this is just how I see it right now. I feel like Trump is leaning on Putin pretty heavy right now. They do talk, but they are enemies still. I think the reason why we haven't seen closure in the Ukraine war is mainly because of the leverage it actually gives Trump. Regardless of who's winning the war, in quotes, wars are expensive and devastating and not great for your country. And the longer they play out, the worse it is. And ever since the war, there have been all these hidden back channels when it comes to oil and gas. And Trump is going after those too, and particularly with India. He has really been laying the screws to India. That whole H-1B thing that was going around this past month was not so much for the reasons you may have heard about on X, but this was really a play against India because a lot of the people who partake in the H-1 visas still live in India, and they earn American dollars and spend it in India, which Trump really hates. So this might have been on the docket anyway, but this is something that is also not great for India. And he has, through this and the use of tariffs, again, has really put pressure on India to stop selling oil to Russia. And it's going to work because as much money as India makes selling oil and gas to Russia, India has kind of taken a role as a big-time refiner, which was smart. But as much money as they make in this whole process with Russia, they make way more money in exports to the United States. And so now they have a decision to make, and this decision, I think, should be a pretty easy one at the end of the day. But you already have fairly low oil prices across the board, which hurts Putin. You already have the extension of the war with very little progress being made, which also hurts Putin. And Trump is leaning on this to get what he wants. And as we've seen in this administration, very different than his first term, pretty much what Trump wants, Trump gets. Now, this isn't the case every single time, but the chains are off this time, and you have the guy who wrote the book on negotiation with the big stack at the poker table. And unless your name is China, you have pretty much capitulated right away. You may have talked tough, so your people think that you're standing up for them, but not even a day or two later. We've seen it so many times with Canada, with Europe, all over the place. Trump will get what Trump wants. But this whole process with oil has actually been a boon to the sector if you know where to look. And because the price of oil has been down for such a long time, you can get really good value here. Again, if this stock loses and I have to sell at a loss, so what? The price is already low, but I think the upside is quite good here. Remember, too, we just got done talking about how steel is going to play a major part in the reindustrialization of the United States and the push in the competition for AI, with China, too. And if you remember me talking in the second part of the two-part series in the AI series that we did here, oil and gas are going to play a very large part in this as well. You're going to need a lot of energy to get this built and to get this running. energy from all sides, and oil and gas is one of the things that the United States does have a nice supply of, which is part of the reason why prices have been as low as they've been. But you guys know, energy investors, we all know these things go in cycles. So when you can buy low, you need to buy low. And if you need to wait, you just need to wait, because it's only a matter of time before this sector gets ramped up again. And we have a plethora of reasons now that we didn't necessarily have before, but we do have them now, which would actually provide tailwinds to this sector instead of all the headwinds we've had to deal with in the past. So I think oil is absolutely back on the table. One of the great benefits about oil stocks, for the most part, is you're also getting a really good dividend. So you're getting paid to wait, which is good because you might be waiting. You also might not be waiting, so there's no reason to sit there and avoid this sector. We just don't know. But if I am going to wait, I'd like to be paid in the process. That's nice. And that's where these dividends come in. Not only when you wait, you get a bonus on the upside and you get a buffer on the downside. This is why we like dividends so much. In contrarian investing, you don't always get them, but if you do, they are quite nice to have. And out of all the sectors I've named, this is really the contrarian play of the bunch. If you're in this space, well, for one, say what you want about Trump, he has been amazing for our portfolios. All the things we've been invested in are now, of the utmost importance in terms of critical minerals and things we need to lock down going forward, which is great to see, by the way. I will say this. I would get so frustrated the Biden administration would just ignore this. And, as an American and as somebody who understands that, this is a competition at the end of the day, the fact that we would just ignore stockpiling any of these metals and attempt to go all in on energy sources we knew weren't going to work nearly as well. Thank God we got somebody in there that actually understands this. I'll bet Europe is wishing they did. But between this and what he's done for crypto, my God. Anyway, speaking of, I'm not going to bring it up this episode. I did buy a crypto token. It's not a new one. And knowing me, you can probably guess what it is, but I do want to save it for next week. Because barring anything crazy, we're in for a banger next week, especially if you are a crypto investor or an aspiring crypto investor. I think you're going to really like what I'm bringing to the table next week. But look, man, I wouldn't be afraid to buy. Are we due for a recession? Yes. Have we been due for one forever? Yes. You can't sit there and be timid because the threat of this still looms, probably more than it ever did before. We'll also have an episode on that. But this is where our cash comes in. Make sure you have cash reserves. But for me, at least, when it's time to buy, it's time to buy. And when you've already built up a robust stock portfolio over the years like we have here, you can go ahead and go forward and buy with confidence. Because when you invest the way we invest and you get signals to buy, there will always be reasons not to buy. This is exactly what contrarian investing is. You're not supposed to buy when it feels good. I bought everything with confidence because I'm experienced and I'm used to buying things like this way. It didn't feel amazing, but I did it. Because as our portfolios are testament to, our portfolios, the ones that are running like crazy right now, with everything hitting all-time highs, that alone should tell you that this style of investing is anything but crazy. We're just early.